to see how we as accountants are, where is the next area where we can help the organization. And basically, enterprise risk management is a subject which currently is very, very opportune, and it gives a nice role into understanding the rest of the business implications, because away from understanding the finance, what this topic or this field does is it lets you understand what business is about. And obviously we see that a lot of people were asking questions, but when it comes to getting answers, most people have left, but you guys will be the proud beneficiary of some real insight into it. Over tea, somebody said, CFO of a bank, how is that different from CFO of all the manufacturing and other companies? And interestingly, it's actually quite different, because the people that you're dealing with are all, when somebody says, oh, you must be looking after the finance as the chief financial officer, you say, no, actually in a bank I don't look after the finance. Yeah, we've got corporate finance looks after the finance, we've got consumer finance looks after financing consumers, you've got people, so you must be looking after cash flows, as somebody said, and I said, no, I don't look after the cash flows, the treasurer looks after the cash flows. Okay, so what do? It's a quite easy life being a CFO of a bank. The only problem there is that the challenge is that you ask the bankers the same questions that they're asking their clients, and they forget that they're in a business themselves. So there they go asking their clients, oh, your long-term debt is out of line with your cash flows. What's your debt-equity ratio? What is your return on assets? The bankers are asking all these questions of the clients, but when they come and look at, they forget that the same answers they have to give to the CFO. So when I ask them questions, they go, oh, we've asked that question of our client, but we've never thought of it from our business point of view. So the challenge is actually preaching to the converted. And it's interesting how many people actually forget that when it comes to your own personal life. And this is what about, just to get on to what we're talking about. Risk is really what we're talking about. Risk, that's what businesses are about. And that's when you start to understand risk. Because without risk, really, there is no business. Everybody would love to have a fountain of money, just flowing money into your bank account, and the company would love that, but that's not going to happen. So what happens? You really look and say, what business do I want to be in? What are the risks that I can manage very well? And what are the services that I can give? And that is something that actually is the starting point of a business. So when you're thinking through and saying, as accountants, if I'm going to start thinking about risk, in effect what I'm saying to you is what you're starting to think about is the business mindset. It's the mindset of understanding what business is about. And that's a very, very important area for accountants to start looking into, because it will allow you to get into the shoes of let's say, top management. It will allow you to get into the shoes of the businessman and the person who is always thinking in terms of business. And so really, risk is a possibility that an event will occur and affect the objectives, and that's really is about what risk is. Now we'll talk about what is risk. And really, risk is now multifaceted. It's coming from all directions. And whoever takes a business decision, in effect, intuitively takes that decision of saying, okay, I will do this, and somehow mentally he has evaluated all the things that he thinks he needs to evaluate, and he comes up with a business decision. We will launch this product, we will drill oil here, we will do this. Someone has taken that decision, but it is done still in an informal way. Now, if you remember our Financial Management 101 class, it taught you risk-reward ratio, and the more risk, the more reward. So each organization will be thinking in terms of how each organization will be thinking on that matrix, where do I want to be? Do I want to be in the high risk profile? Do I want to be a low risk? but low return company. And the mic is tired. It's had a tough day already. And therefore, people need to understand the risks that they're looking at. We've seen the latest crisis. We've seen and whether it's financial sector, we've seen the oil sector crisis that we're all seeing currently run in the BP scenario of the Gulf of Mexico. All of those shows that our risk eventually does come to roost. There is no such thing as a riskless return. However, now for companies to make money, you need to organize yourself around managing that risk. And to manage risk, you really need to understand the business and the business environment, and that's why you need to often focus on what business you want to do and narrow down those things that you can best manage. So what is risk management all about? It's really managing this risk-return, risk-reward ratio, and on the other side, it's balancing the control versus the risks and the amount of effort you want to put into controlling or mitigating risk versus carrying the risk and creating the opportunity. The previous speaker rightly said, actually a crisis is an opportunity to make money, because at the end of the day someone is going to come in at that point and start looking and seeing value there which others haven't seen. What is an enterprise risk management all about? It's really a process by which you manage the whole risk gambit. So it includes looking at what risks you want to do, how you want to manage it, and then how you want to control and finally report it. Almost 40 years now, when you look at the accounting financial statements, everybody talks about risk, but none of our financial statements in any way are adjusted for risk. So, it's something we all intuitively talk about, we understand, but only now, I suppose, with a bit of capital adequacy ratios, that somewhere you can say that it's slightly risk adjusted. But on the whole, all of the financial reporting, the balance sheet reporting, all our financial reporting, none of it is actually risk adjusted. So if someone makes X amount of money, everybody says, oh wow, they made a lot of money. But really nobody, definitely not on the first 5 or 10 pages of a financial statements will you see anything to do with risk. Now you're seeing some risk reports come into the detailed analysis, and they're coming in some page number 135 or note number 86 or something like that. So it's starting to come in. People are still, again, but it's not quantified. It will be mostly, it will be stated as a fact. It will be a descriptive situation. Okay. This is what I said earlier. Enterprise risk management is management. It's about understanding what management is about. And every manager makes decisions based on implicit risk estimation. So what's new about enterprise risk management? It's explicit, it's structured, it's an integral approach, and it's organization-wide. And it's therefore, it's not each individual doing what he thinks is right or what level of risk he thinks is right for the organization. It's the organization thinking through all the factors and coming out in a formal document, in a formal process